Welcome everyone to today's webinar. This is Tom Garlock at IRA Asset News. We have a very special presentation for you today. We're going to talk about a low-risk, high-return investment that's passive. That simply means you don't have to spend a lot of time managing this investment. Today's speaker is Judd Villa at Safe IRA Investments in Sarasota, Florida. I've known Judd a long time, and I've been down to visit their business over the years, and I'm very pleased with their performance. Many of my friends are participants with their company. Let me introduce Judd and his partner. Judd is a principal at Safe IRA Investments. His background is in mergers and acquisitions. He's a licensed real estate broker. He has over 20 years of experience in the real estate field. He's a graduate of the University of Dayton. His partner is Pat Brester. Pat is a residential and commercial sales and property management specialist. 10 years of experience in that area. Pat grew up in the construction industry with his father's company. He's got an undergrad degree from Purdue and an MBA at Illinois State University. Judd, welcome to the webinar today. I've been looking forward to this, and it's great to have you with us today.
Thank you, Tom. I'm glad to have the opportunity to share what we do with everyone else.
Tell us about what you're doing in Florida. You guys have so many interesting opportunities, and I know we're going to talk primarily about the low-risk, high-yield, passive type of investment, but I think you want to start by giving us an overview on the Florida market, where you are, and what you do.
Okay, great. Let me first tell you a little bit about what we do in a nutshell, and then I'll go through and describe the markets in Florida and the Florida market, and then go over specific examples on how to achieve returns. We are lenders and investors, and what we basically have done is we have developed over the years the safest and securest way to lend money. That's exactly what we do. We currently own these notes and loans that I'm going to be speaking about, and I'll show you how you as a potential investor could get involved with us as well. But let me first talk about the markets we serve in Florida, if we can forward it to the next slide. We're on the Gulf Coast of Florida, and the Gulf Coast of Florida is, we handle areas just north of Tampa all the way down to Naples, and that includes everything from Tampa, Clearwater, to Brandon, to Bradenton, to Sarasota, Venice, Inglewood, Northport, Fort Myers, and of course Naples is probably just about as far south as we go. And as far as east as we go, as we touch the eastern side of Orlando. We used to quite honestly cover the whole state, but there was so much opportunity right in our backyard. We don't need to drive as far. There's some tremendous opportunities, and we'll go through that. If we can forward the next slide. I'm going to read this for a little bit. Sarasota real estate market is its highest level since 2005. Prices remain stable. This comes straight from the Sarasota Association of Realtors. The next point is our market continues at a hot pace. Our statistics continue to show that Sarasota market is enjoying a very steady recovery. And the third point that I'm going to go on, and I have charts to show you folks, is the available inventory of homes on the market has dropped to a decade low. That's over a 10-year low. And if you can change it to the next slide, I will be showing you why people actually buy in our markets, and then I'll show the statistical analysis of what's been happening. I'm not sure if you folks are familiar where Sarasota is. We have investors that are all over the country. Some fly in and see us. Some of us understand the market and understand how our documentation is put together, and our credibility is such that we're known, and they can invest from without even coming to see us. So, we're in Sarasota. It is the #1 beach in the United States. White quartz powdery sand. It's beautiful boating waters, tranquil blue water. Since we live on the Gulf side of Florida, the water is significantly warmer than the Atlantic side of Florida. So if you like to go in the water and love warm water, the Gulf Coast is the place you want to be. Sarasota is recognized as the fine arts community and the cultural hub of Florida. Another interesting fact is we have no state income tax. There's a lot of people that start to buy a second or third home in our market and then realize, wait a second, if I put Florida as my main homestead, then I do not have any state income tax. If you folks are living in New York or Illinois or California, sometimes state income tax can go up as 9 to as high as 10% of your income. Crazy. 10% of your income just gone to that state. We don't have those issues here. We love it. We're also seeing baby boomers. I'm sure a lot of you on the call are baby boomers. I'm not far away myself. Where do baby boomers? Baby boomers like warm weather. Warm weather, nice sunshine, low cost, no income. Our real estate taxes are very, very low comparative to some of the northern and western states, and no state income tax. Your dollar stretches farther here. And if you're a golfer and like to do things, weather is never, ever, ever a limiting factor here. You can do whatever you like whenever you want to. We're also seeing a lot of international buyers come into our market, which is very good, very, very good. A lot of Europeans, a lot of Canadians, their dollar stretches farther here as well, and it's in the United States, so it's very safe that way. Forward, please. Forward, there we go. Let's look at this chart if we could. This speaks in terms of single-family homes. I want to go to the top line, single-family homes, and this month on the left-hand side is 2538. That means in our market, there's only 2,538 single-family homes for sale. This includes homes that are low cost in a very depressed condition in an area that we don't buy, all the way up to the 10 and 15 and $20 million homes that are on the beachfront communities and directly on the Gulf. So this really isn't a lot of homes for sale. If you go right down from that to last year, you can see last year at this same time, there were 3,100 homes. So what has been happening is our market, Florida market, is very similar to California, Arizona, and Nevada market. Our four markets, we had some huge unprecedented price appreciation. It was rising through the stratospheres, and you probably folks have heard of that. Then what happened is we came down hard. We have since normalized. We bounced off the bottom, and we are absorbing all of these inventories. So one of the numbers we need to focus on is if you go across this chart, it says months in inventory, and it says 4.3. If we can bring my pointer right there to 4.3. See the little red dot? A very healthy market of supply and demand being in equilibrium is 6 months. That means price appreciation is going to be slow, constant, and reliable and steady. If we have inventories above 6 months, that means price will start being depressed and prices will come down. I will illustrate it on the next slide when we get there, but on our worst, we had 23 months of inventory over 3 years ago. It's about 4 years ago. We had 23 months of inventory. Everyone thought this whole country was going under. All of Florida was going under. We experienced a higher peak and a lower low. We have come off of that, and now there is no inventory. So a lot of people came in and started buying all of our inventory because the prices now made sense. They were actually affordable again. Before they got way out of line. They got crazy. So 4.3 months of inventory where we are now. Every time we put a home on the market for sale, we have multiple offers on it now. It's like it was 5 years ago. If you wait long enough, things come back around. That's exactly what's happened. But we've reestablished more reasonable and honest pricing rather than pie-in-the-sky pricing. Last year at this time, you see 5.8, almost 6 months. That's equilibrium. That's right at equilibrium, 6 months. That's a healthy market. Now it is a seller's market. Let me repeat this, folks. It's a seller's market. People don't understand that. They think because they live in the Northeast or they live in the Rust Belt somewhere, they think because they live in an area that isn't doing well, they view that if the whole other part of the country isn't doing well. And Tom and I have had these discussions before. Real estate is localized. There are parts of this country that are doing absolute phenomenal, and then there are other parts where I would never invest anything in those areas because you have no idea and there's no security for you to actually achieve returns there. If you look at the number right behind, under 5.8 is 4.7. So last month we were at 4.7. This month 4.3. So we're still trending downward in months of inventory. Anything around 6 is healthy. Underneath 6, we're going to start seeing more price appreciation. So we're very excited about these opportunities. Forward. This chart illustrates from left to right the year 2000 all the way through 2011. And if we look on the top annual sales numbers of 6,533, that 6,500 units were sold in 2000. We had a steady incline all the way up over to 11,267 in 04. 05, we still had a very healthy market of over 10,000. And then that's exactly what happened. We all heard it in the news, national news, everyone heard it. Florida market, we came down. But notice when we came down, the inventory levels, the bottom inventory levels were right around 6,000, right around 6,000. So we know that in our market, there is always at least 6,000 people ready and willing and able to buy a home. No matter good or bad, no matter what the pricing is. If the pricing, and if you notice, we're continuing on an upswing year after year after year of more and more people buying more homes, so that's less and less inventory. Supply and demand. Less inventory, prices go up. So we are very excited about what is happening in our market. We've been up and we've been down, and now is a fantastic opportunity. I want to go forward and talk to you specifically about some examples that we use and that we have in our portfolio. I want to stress that we are investors just like you folks. We are lenders just like you. And these examples that I'm using, we currently hold in our portfolio right now. So what we do is we buy the homes, we fix them up, we turn around and sell them, and we sell them with seller financing. When we sell them with seller financing, we are acting as the bank. And I'm going to use this example to start with. It's a beautiful home. It's off of Swift Road in Sarasota. Purchase price is $250,000. The buyer will put down 20%. Now, the first thing we look at right now when we're looking to vet our buyers, meaning we do due diligence on our buyers before we would ever sell them a property. We want to first make sure that they have the ability to put at least 20% down on our properties. Now, we know from history, if you put at least 20% down on your property, you have a very significant amount of money invested in that property, and you will not walk away from that. You have equity in that property. You'll find a way to keep that, sell that, recoup some of your investment. So at 20% down, we finance $200,000 at 9% for 5-year balloon. That we are then receiving a $1,500 monthly payment for this property. These buyers are paying $1,500 a month for this property. Over a year's time, if you times 1,500 times a year, is $18,000 a year. You put out $200,000, you receive $18,000 back a year, and it comes in the form of every month. This money comes back to you every month after month after month. 5-year return is $90,000. So it is 9% simple return. However, I'm not including compounding that interest. So if you're receiving $18,000 a year in this example, you could then reinvest that $18,000 year after year, and your 9% return would go up tremendously. Does everyone understand that? Tom, did I explain that properly?
You did, and it's really an important point. After the second year, for example, there's $36,000 back in your account that you should be reinvesting into something else. So it's growing while you're still getting the $18,000 a year of interest on the original loan that you purchased.
And this is all passive income. So let's go forward to another example. I want to point out that in all these examples, you can invest your money, and when I say your money, it can either be a retirement fund money, a pension plan money, a 401k money, IRA monies, and or your other investment portfolios monies. The difference being, if they're invested inside a retirement plan, the money has to go, when I say the money, the monthly return on your capital has to go back to those retirement plans of which it came. Just as if you invested, if you cashed out a CD and invested, this money would come right back to your account that you designated. We only invest in working class homes, working class neighborhoods. We have a firm policy. Any street that we don't feel comfortable driving down or walking down at any time, day or night, I don't want to invest in those type of homes. I don't want to be in those type of neighborhoods. I want working class neighborhoods, working class homes, and I'll explain in greater detail. You can see here's another home we bought, we fixed up. We sold it for $119,000. The buyer came up with 20%, which was $23,800. So we financed $95,200. This one we financed at 12% interest. The first one was 9%. This one is 12%. We try and get the highest return we can for us and our investors. We hold this in our investment portfolio. The term is 3 years. Now, when we do have 12% interest loans, they go very, very quickly. Actually, people put their name on lists for 12% loans because it's an unbelievable return based upon the collateral and security of the investments. These are all, let me stress, these are all performing notes and mortgages that are seasoned, that are already held in our portfolio that we currently own. And what we do from time to time is we sell off some of our performing loans, so we turn that into cash so we can go and buy, fix, and sell more properties. The only reason why we'd ever sell these notes at 12%. So we have other properties to buy, fix up, and sell, and keep doing that over and over again. This monthly payment on this home on 29th Street is $952. That comes in every month. That's just over $11,000 a year. 3-year return is $34,000. And again, that's all simple interest, interest only. So at the end of 3 years, you would have received $34,272 plus your initial investment of $95,200. So you'd have both those numbers together. So in the meantime, you can reinvest that $34,272 over the course of the 3 years to achieve even a higher return.
Judd, a quick question. Do you mind telling us what you paid for this house, how much you put into repairs? I'd like to know how much money you made by buying, fixing, and then selling this.
That's a great question. I don't have those numbers available, but I can tell you what our margins basically are. Basically, when we buy a home, fix it, and turn around and sell it, we make close to 10% margin on that property. If we didn't make 10% margin, it's not really worth our time and a risk to do that. We have a large overhead and corporate structure that we must look at. We bid on over 100 homes a day, and we have a lot of resources out in the field at auctions, whether they're foreclosure auctions, tax deed auctions, REOs, short sales, foreclosures, real estate agents. So we're always looking through giving offers on dozens and dozens and dozens of homes a day. So when we finally get one that meets our criteria, we then acquire it. We spend the time and money necessary to fixing it up. If you look at every one of these homes, they are in model-like condition. We're very proud of the work we do, the carpeting, the floor covering, the paint, the appliances. They're brand new homes. They look beautiful, and that's why they don't last long on the market. We like to turn them over quickly and then go do it again. So our margin as a company is just around 20% a year. We try to turn our money at least 2 times a year. If we're good, we can turn a little more than that. So we can free up that capital and then keep doing that.
So my quick guess is that you may have had $100,000 into this house when it was finished and sold it for $119,000?
I would have to look at the numbers, but generally it's around 10%. After we're done with all of our title work, our real estate commission, all of our expenses for buying and fixing the home, as well as our expenses for acquiring the home. So
okay.
we're generally net around 10%.
And you do that 2 to sometimes 3 times per year in a market like this? That's
correct.
Nice.
Yeah, that's beautiful. So let's go to the third example if we can. This is a home in Riverview. If you folks aren't familiar with Riverview, if you're familiar with Brandon, which is a large suburb just east of Tampa, this is just south of that. It's just south of Brandon. It's a 2-story home, concrete block. Purchase price was $151,000. The buyer put down 20% or $30,000. So we have a mortgage note of $121,000 on this. This is another 12% interest-only loan, which is phenomenal. So the monthly payments this buyer pays is $1,215 a month. That hits your account. It actually hits our account every month. On a yearly basis, that's $14,580. Now, in every one of these examples, the buyer is obviously responsible for their taxes and their insurance. They bought the home. They're responsible for their expenses, their taxes and insurance, and the interest to us. So this is another 12%. If you look at that 4-year total return of $58,000, if you invest that along the way, your return would go significantly north of 12%. Any questions on that one?
Looks good to me. We should touch on how you structure these loans. Maybe that's better a little later in the presentation, or do you want to go into that now? It was good you mentioned that the buyer's paying the insurance and the taxes and all the maintenance, but I think it's important to also understand how you structure the loan in order to really minimize the risk of default or foreclosure on the house.
I think that's a great idea. Let me go into that right now. I see that as a question as well. When we buy homes and when we lend on these homes, we currently own these in our portfolio. And what is the most important thing for us is to minimize our risk. How we minimize our risk lending money on real estate in the state of Florida and in many other places as well is we only sell these homes, seller financing, under a contract for deed. It's also known as an agreement for deed. And let me digress for a second and explain what an agreement for deed actually is. And I'm going to use the example of a car title because most of us over the years have bought and sold more cars than houses. And it is just like at any time when you went out and bought a car and had a bank loan on it, the bank actually holds the title until you fulfill your promise and make the very last payment on that car loan. When you make your very last payment on that car loan, then the bank releases the title, which they hold as collateral, to you, and then you actually have the title in your hand of that car loan. You own that car free and clear. You have the title. Well, that is the exact same way we do with our homes. It's the safest way we can ever hold real estate because we still have the title and deed to that real estate. When we sell it to people, we're selling it on a contract for deed. So once they pay us the complete amount, then we deed it and have a closing in their name. In the meantime, it's in our name. So let's talk about worst case scenarios. I'm a finance numbers guy by trade and by background, and I always like we're looking at worst case scenarios. Worst case scenario is an individual puts 20% down on a home. They stop paying their monthly payments. Well, what do? Well, since it is still in our name, please listen to me, we do not have to foreclose. We still own the home. All we have to do is have an eviction, file an eviction. It's a simple eviction process to have the people evicted out of the home. Now, we have never had to do that in the last 5 years that we've had this program, and in the hundreds of deals that we have done, because the people have put a significant down payment down, 20%. There's a lot of equity in the home, and they don't want to lose that equity. And you know what? I don't want them to lose their equity either. They just need to make their payments. And they all have. We've never had one late payment. And I know that might be hard for a lot of you folks to believe if you're in other parts of the country. So the keys to contract to deed are you never have to foreclose on the person, and we've never had people not perform on their mortgages. Now, Tom, isn't that amazing?
It is, and you know, I'm thinking the worst case, just looking at this example, the worst case is you get a $150,000 home back in exchange for your $121,000 loan and any interest that you collect before a default were to occur.
That's exactly what you do. But what you don't know, or other people speaking, this home was sold over a year ago. This home here is worth close to $200,000 right now, because our market is going up and appreciating. So you would be getting a $200,000 home for $121,000 minus any payments you receive. So the buyer that bought this home, guess what? They're not going to allow that to happen. They would turn around and sell the home first, pay us off, pay you off, and then they would keep the equity. So
I would think so. Yeah. In my experience, they would, with that much equity, they'd probably go out, if they had to, and get a 15% interest loan for a year just to make sure they didn't lose all the value that's in the house in a worst-case scenario.
And that's exactly what we want. We don't want to get involved in foreclosing and lawsuits and legality. It's the last thing we want. We're offering a fantastic product at a good price to people that cannot get mortgages at bank financing right now. And a lot of the people that can't, here's a question I see come over, why would someone pay 9 to 12% interest? Or who pays that? Well, I don't know if anyone listening on the line has their own business, a small or medium-sized business, or has been an independent contractor. The banks are very tight right now with lending, and they are much even stricter guidelines lending to businesses or small business owners or independent contractors or any folks that work on a commission-based type of material, a type of an income. If you're in that category, you'll notice how hard it is to get bank financing. So what these individuals do is they see it's a deal, they know it's a deal, they buy the home, they pay the higher interest rate, they have some more established credit lines, and then they'll try and refinance out 2, 3, 4 years down the road and to a much lower interest rate and improve and reduce their monthly expenditures. Okay. We more than welcome to invite you folks if you want to come down and take a look and visit our offices, see who we are, what we do. We'd be happy to speak with you. We're even happy to bring you out in the field and show you some of the opportunities in the homes that we do. You can meet myself and my business partner, Pat, and see how we fix up these various homes, see how we then market and sell these, and then we actually have the mortgages in-house in our portfolio. We've already invested in them. I wouldn't ever ask anyone to invest something that I'm not already invested in. We're invested in these mortgages. We can pull up the history, what the people put down, when we received their payments, And we have that all spread out on an Excel spreadsheet that our accounting department does, and they track every time someone puts a payment in. And we'd love to have you down here. Take a look and see who we are, and you'll be very impressed. And we can go from there. If you can go forward to the next slide. Sarasota, we have a lot of different types of accommodations, everything from 4-star Diamond Resort beachfront properties. There's a Ritz-Carlton in our town, as well as much more budget-minded motels and hotels that are clean and used for traveling. So there's a lot of different opportunities depending upon your taste and your budget and what you care for. So you're more than welcome to pick up your hotel rooms. We'll help out any way we can. We can pick you up at the airport if need be, show you around the town and the community, and show you some opportunities how you can make money. Please, let's go to some questions and answers now. Tom,
I've been watching these, and I've been watching these come in, Jed. I've kind of grouped them together. There's several that have asked about the minimum investment for these mortgages.
It's a great question. I don't know if I should pull back over to those 3 examples, but if we thumb back to those 3 examples, this first example is this is a $200,000 minimum that would be required for that home on Swift Road in Sarasota. We have one investor, one property. I want to stress that. We don't pool funds. We don't securitize any of these funds. There's no type of FDIC regulation that we don't want to get involved in being offering securities. We're not offering securities. We're private mortgage. You're private lending on a home itself. You're the lender, and you have the security. That's all it is. It's private lending transaction. You're acting like a bank. That one's $200,000. This one in Bradenton is $95,000. And then the third one in Riverview is $121,000. Interest rates go from 9 to 12%. 12% notes don't last long. We have investors that are lined up, and they put their name on a list, and it's first come, first serve, depending upon the amount of money that they have to invest. And when we see the criteria, we match them up immediately. So 12% aren't always available. 9 are more available than not. But if you are interested in 12, you just have to register, call me up, and we'll get you on that list going right away. So when they come up, you'll be ready to go on that.
Judd, there's a question I'm looking at here about any extra costs. So if I'm, take this loan, for example, if I'm committing to the $121,500, am I going to pay anything over and above that for fees of any kind, processing, closing fees, any costs that haven't been talked about?
No, the only fees that you would have is if this is held inside a retirement account, you would have some small retirement fees that, for custodian or administrative fees that have nothing to do with us. That would be your custodian or administrative account. And I know, Tom, you know a lot of the top custodians throughout the country, as we know several of them as well. And we're happy to recommend some other custodians if you folks don't have one or are looking for another one.
In this question, you've sort of answered already, but just to help clarify it, let's talk about the security. The lender invests their money. Tell us about the security again. How safe can you make this investment?
Okay. And the timeline. If you have capital available that's sitting in cash right now or in an account somewhere, you can be fully invested in this instrument literally with under a week. It only takes 2-3 days of paperwork. The security is the physical asset itself. You would physically own this property that you would invest in, for instance, 11101 Golden Silence Drive. You would physically own this house and the contract to deed that's associated with it. And that contract for deed spells out the terms of the note that this buyer is paying you 12% interest and $1,215 a month until he's paid in full for 4 years. So ownership would be transferred to you. You'd own the physical property. This is real property we're talking about. This is real things that you can touch and feel not some stock certificate somewhere or some of these wild and crazy types of financial instruments that a lot of people can't understand and have put our country at peril in a lot of ways. You'd own the contract for deed and the house itself, and we would provide all that paperwork, and it's quite easy process.
Another question that's come in, your track record. Is there, you want to talk about track record? Is there a written track record? People like to look at the track record of the company they're partnering with.
We have over a 4-year history of success doing this program. We found that there's a real niche that banks aren't lending to small business folks and entrepreneurs and individuals. They're very tight in their lending standards. And if someone does have some credit challenges and their credit score isn't the greatest, we will do our due diligence. They fill out an application. We, in fact, verify their employment, verify where their funds are coming from, find out what the rent or what they are paying on a monthly obligation right now, and we try and pair them up with the properties that they can currently afford. So we have done hundreds of these deals. We have never had one that hasn't performed. So we'd be more than happy to if you are interested, to give you some more information regarding that. Mind you, everything we do is confidential, so I would have to ask the investors. If we're in it, I'm happy to give it. I just would ask that you wouldn't knock on the door of that buyer, because that would be kind of an intrusive of rights for them to do that.
I'll just share with everyone, the first time I came down to visit you and Pat for a few days, it was a great tour. You guys do a phenomenal job in remodeling the homes. I came away with a really good feeling, especially after we must have spent half of the day in the conference room going over file after file after file after file, just reviewing the track record, and each of those past investments, that have gone full cycle. I just needed to see that proof, and you were more than willing to spend lots of hours letting me go through those records to verify what we're talking about here. So if any of you do get the opportunity,
to open up all of our files. We have a full-time accounting person, and we have a CFO, and of course myself that handles all the financials. Be more than happy to open up any and all files. We have no secrets. We run a very tight ship. These are actually mortgages that we hold in our own account, and we currently are performing season that we collect on every month. I also want to point out, I saw this question. I know we have two kind of classes of investors. We seem to have a first class of investor that is looking for a monthly income, but when you have in returns between 9 and 12% a month, that's safe and secure. You can see how you can actually achieve retirement either at a much shorter point in your life or with a lot less money. If you're comparing our instruments to a fixed income security that's offering 3 or 4 or 5%, and ours are offering 9 to 12%, you really need half the amount of money to invest to achieve the same monthly income. So we have a lot of investors that actually live off the income on a monthly basis, and their principal is always protected for the years to come, or if and when they pass, that principal is then passed to their heirs. The second type of investor we have are very successful, financially successful individuals, and they do not want any more monthly income. Their main concern that we're seeing is they want their funds and their investment to be treated as long-term capital gains as opposed to short-term capital gains. And we are one of the only firms that I'm aware of in the country that has the ability to, if they invest with us, to treat it as long-term capital gains. And if anyone's out there that is hearing this would like to learn more about that, you can please call me direct. My phone number is 941-556-6798, and I can walk you through that process in detail. Or if you'd like to come and visit, I can go through exact examples on how that would work. More than welcome. Our website is www.safeirainvestments.com. Please review that. It says a lot about who we are, what we do. If you scroll over to the Education tab and pull down to the videos, it explains more about the private lending opportunities. And if there's anything I missed, Tom, please let me know.
I think you've done a very thorough job, Judd. Thank you very much. We've gone a little over time, so thank you, everyone, for attending the webinar. I encourage you to get in touch with Judd by phone or by email if you can break away. Sarasota is a great town. They can definitely show you around, show you their track record, all the properties they currently have and the ones that they have worked on in the past. I think you'll enjoy your time and have a very good high return, low yield, passive investment by partnering with Safe IRA Investments. So thank you, everyone. Enjoy your day, and please be in touch with Judd through the website, his email, or through the telephone number that you see here on the screen.
Thank you, folks. Appreciate the time.
Good job, Judd. Have a great day. Thank you.
Thank you, Tom. Bye-bye.